Welcome everyone to today's seminar on a dynamic and rapidly evolving frontier, space financing. My name is Jackson Chow. For those that do not know me, I'm a partner at Farley Williams and part of the aviation and aerospace team. We're privileged to have Randeep Bubbra, who's a partner from our London office. He will first provide a presentation on satellite financing, joining us through Zoom. His presentation will be followed by a panel presentation involving Professor Dewey Yee. Professor Yee lectures at the Hong Kong Polytech University in the area of aviation investments, in the area of aviation management. And he's also the founder of Anchor Venture Partners. He's also joined by Ron King, who's the managing partner of Perpetual Space Ventures, a venture capitalist firm based in Hong Kong, which focuses on investments relating to the space sector. The theme, Constellations and Capital, financing space assets and satellites from ground to orbit. It captures the essence of this new commercial realm where innovation meets investment. As private and public sectors venture beyond Earth's atmosphere, the financing environment for space assets is unlocking unprecedented opportunities, a market poised for exponential growth. During this seminar, we'll explore core elements of satellite financing, industry trends shaping the sector, and address some of the complex risk associated with this landscape, spanning technical challenges, regulatory uncertainties, and financial intricacies. We'll also focus on how investors and companies navigate these risks while capitalizing on opportunities that promise to redefine connectivity, communication, and exploration. So for our audience on Zoom, just some general housekeeping. The seminar provides for simultaneous translation in Mandarin. So for those joining us from China, if you click on the interpretation button on Zoom, you can nominate the Chinese channel, and there will be a simultaneous translation into Mandarin there. Also, if you have any questions from our Zoom audience, please feel free to type those into the Q&A session. If we are able to address those questions, we'll try to address it during this seminar. So first of all, I'd now like to introduce you to Randeep Bubbra in more detail. So Randeep is a partner in our London office. He has vast experience across asset finance with a specialism in aerospace, in particular satellite financing, and has advised over the last 10 years on financings on GEO, MEO, and LEO satellites. For those who don't know those acronyms, they will be explained. He's acted on all types of financings in the space sector, from startups to established operators, from corporate style financings to complex project financings with multiple stage milestones, contingent equity requirements, financial covenant triggers, and technical and market stipulations. Many of these have been award-winning transactions and integral to spreading connectivity around the world, with examples being multi-billion-dollar financings for O3b, OneWeb, and Telesat. Without further ado, I'd like to pass on to Randeep.
Thanks very much, Jackson, and hello everybody. Thank you very much for that kind introduction. I will try to keep the presentation as simple as possible, because I'm conscious we sort of have a split audience with some people having sort of lots of experience in the sort of satellite industry, and others less so. So there'll be something in this for everybody. We'll sort of start with some basics and some foundations, but then we'll quickly move into sort of themes and challenges that the industry is seeing, and also some financing structures, including a financing structure at the end, without wanting to sort of give away the sort of capital markets side of things that potentially could open up some new ground for the industry. And then finally finishing on sort of what we see as sort of the next on the horizon. So that's sort of the way that the talk is going to go. Um, and I think the reality around this industry is that it's been around for a long time, but the participants that are coming into space finance in particular, and the way the industry is moving away from, and we'll come on to this, sort of traditional, very big satellites that are very expensive, very far from the Earth, and provide specialized services. A lot of those stereotypes are changing, and a lot of those viewpoints are changing with new entrants to the market. And so if we go on to the next slide and sort of talk about some of these acronyms that we're throwing around, like GEO, MEO, LEO, HEO, effectively, and we've got a lovely little website that we'll come to in a second. If you think about this sort of broadly, geostationary satellites, which is what we call GEO, are the furthest away from the Earth. They provide a coverage over a large area with a very high throughput, and they're the sort of traditional satellite, if for want of a better word. And maybe we can sort of see this visually. So if you just click on the Orbit's website. So if you're looking at this sort of diagram, GEO is essentially this green line all the way around the outside, which is sort of the furthest away. They're the ones that are sort of traditionally been used for broadband and for backhaul. And really, they're sort of 22,000 miles away from the Earth. There's no downside to those satellites other than the latency. And sort of as the world moves towards video and moves towards low latency kind of environments and people wanting much quicker broadband, that has been one of the sort of reasons for a move away from GEO, although they do have their place still in the market. If you look at MEO, and this is sort of the medium Earth orbit satellites, when you talk about these are kind of the middle ground in all areas. So essentially, this is still providing quite a high throughput at a lower latency, and throughput is the amount of data that you can kind of push down the beams to various areas on the ground. And it's kind of a way of balancing, because if you contrast this to low Earth orbit satellites, we call LEO, the problem with low Earth orbit satellites, even though they're incredibly popular and are sort of the buzzword at the minute, is that you require a huge amount of satellites in order to get global coverage, or in order to get coverage over a large area. And obviously there's different sectors in this market that we'll come on to talk about. But sort of very broadly, the further away you are, the more area you can cover at the cost of speed or latency. The closer you are from a LEO perspective, you can provide much more speedy broadband or speedy kind of Earth observation, or other things that we'll kind of touch on the vertical side, but at the cost of you need far more satellites, because these things are much closer to the Earth and are spinning around at high speeds, which is where the sort of constellation phenomenon has kind of come from. We have much more constellations now in the market than we did have, say, 20 years ago. So that's kind of a brief lowdown on GEO, LEO, and MEO. There is also something called HEO, which just to kind of explain that in case it kind of comes up, that's effectively highly elliptical orbits, which essentially just means that as the satellite goes around the Earth, at one point in that orbit, it'll be very far away. So it effectively allows you to focus on certain regions or certain areas, so whether that be the poles or otherwise. That gives you an advantage if you're looking to provide only coverage to, say, Asia or a certain region. It also tends to have slightly lower launch costs, which, as you'll see when we kind of go through some of our slides today, launch costs and general CapEx requirements for the space or the satellite industry is one of the main issues that the industry has to face, because the cash flows once the satellites are up there can be very strong, and the revenues can be very strong, but it also requires a lot of cash, a lot of CapEx to get up there. And I suppose just before we move to verticals, it's worth talking about, I think, this in the context of why we should care, or why we're sort of having this discussion today. Why invest or why lend into an industry that, seems on the face of it to have substantive risks? And I think the best way of answering this, as someone who's very passionate about space and has been involved in it for quite a long time, is that the high level numbers, and these are from McKinsey, not from me, are huge. The global space economy is estimated to be 1.8 trillion by 2035, and that's up from 630 billion in 2023. It's expected to grow at twice the projected global GDP rate over the next decade. To give some context to that, that's effectively in line with the semiconductor market, which has been spoken about so much post-COVID and in this kind of AI area. And I think that's the way to sort of think about this. We'll kind of come to sort of space and satellites in the round, but they are, a lot of them, in the smaller side of things, very much tech companies and very much focused on AI and other kind of new areas. So just picking up on verticals then, and I'll come back to multi-orbit because that kind of feeds into the verticals. Essentially, what verticals are where the revenue is generated from these satellites, and all of the satellites can use all of these verticals, but they tend to vary. So aviation and maritime, if anyone's ever been on a cruise ship and suffered really bad broadband, sort of when you're out at sea, you'll sort of see the need for a much better connectivity there, and lots of people are moving towards LEO constellations now, one of the largest being Starlink, and I think Royal Caribbean and others have started to put user terminals on for their services on their cruise ships, which is going to provide much better connectivity. I think, unfortunately, on the aviation side, that ability to get on a flight and sort of switch off and say there's no connectivity and there's no Wi-Fi is going to, well, it's already there for a lot of airlines, but it's going to be much more mass market and is going to move away, which is a disappointment from me on a personal level, but good if you want to be connected. Defense, I think, is the other vertical that's very recently changed. I think with the geopolitical environment and how spending, particularly in Europe, has been increased, there is a huge vertical and a market for satellites and for sovereignty of certain satellites and constellations in order to provide strategic observation defense requirements. And you'll see as we kind of come on to things, that's a combination of public and private investment. That's not just sort of government-led schemes. And then finally, just touching on some of the later points here, the telecoms piece is the sort of traditional broadband, and that's still needed in lots of areas around the world, lots of remote places. But also we should talk about Earth observation and sort of sensor satellites, which are sort of the other side of the coin, really, in sort of the market. And those companies are traditionally newer to the industry, smaller companies that are kind of trying to be nimble and provide, whether it be constellations or sort of a few satellites up in space to provide real-time or kind of as close to real-time data of the Earth in various places. And that can be used for agriculture, it can be used for finance. The way of thinking about this is sort of, yeah, unfortunately, you have a natural disaster in the world that you need to be able to have imagery of what's going on to help kind of rescue effects on on the ground, and that's effectively what some of these satellite providers can provide. If we flip back to sort of a LEO model, which a lot of these satellites are, unfortunately, because the satellites are spinning around the Earth very quickly, your revisit time, unless you have quite a few satellites to the same area and to the same place to either take video or pictures of the Earth, can be a bit higher. So that's where a mix of, say, multi-orbit, whether that be a MEO or a LEO kind of combination of satellites, can give you an advantage. And that's something that certainly people are looking at. The other final point I would make on sort of verticals, the one that's kind of missing from this list and is sort of combined in cloud, is kind of data as a service, which is effectively, in the world of AI, in the world of cloud computing, there is a big push for, whether you call them data centers in space or whether you call them connectivity between data centers, there is still a lot of bandwidth that is required, that is going to need to connect places on the ground with other places on the ground, and that is effectively, one way of doing that is through space and through satellites. The last point that I would touch on is two things on this slide, and that's direct to device, which is, depending on your viewpoint of the industry, something that's really going to change the market, or something that maybe potentially won't be as successful as others think. And to talk this through, this is essentially your Apple smartphone. So one example of direct to device, for example, is if you're somewhere with no signal and you need to have connectivity for the purposes of emergency services, Globalstar is currently the provider that allows you to use that over your Apple device, and that those are effectively provided by a constellation of satellites. And there are other providers looking to do exactly that and give you direct service to your device, and likely to charge an extra cost for that on your sort of mobile subscription plan. That's kind of the new market, or one of the markets that effectively there's a lot of buzz around in the space industry. If we could move on to the next slide, please. Just very briefly on this one, just to kind of talk you through some of the main players for those that don't know. You see at the top there a lot of the satellite manufacturers. There's a lot of traditional players, Thales, Airbus, Boeing. You also see some of the new faces, so say someone like a Terran Orbital, who's now been bought by Lockheed. But essentially, you do have in this industry a lot of OEMs, both on the satellite manufacturer side, but also on the launch services side, that are coming in and providing new tech and new services. You know, the domination that you may read in the press around Starlink and Kuiper and SpaceX is true to a degree, but there are also other players that are kind of coming into the market, and that's something that we'll come on to later. The ECA piece, which is the last point to really talk about on this slide, it's very fair to say the market has very traditionally been dominated by bank finance, and predominantly bank finance supported by ECAs. And there's a list here of the European ECAs and US Exim and others. And they will still continue to have a strong role to play in the industry going forwards. They provide a very useful mitigation to a lot of risks and a lot of coverage to lenders. But I also think, and we are seeing a shift in the market that we'll come on to, where we have new innovators and new players coming in, whether that be on the PE side, whether that be on the VC side, who potentially have more appetite for risk and for kind of taking some of the risks that are there inherently in the satellite industry for more upside. If we go to the next slide. I'm not an engineer, so I'll be very brief on this slide. I'm just a humble lawyer, but I just very quickly to kind of talk you through how LEO constellations in this instance work. If you are trying to pass data from the sort of ground station on the left, and the ground station here is the sort of antenna on the ground, if that you see sort of in blue, that goes up to a satellite in the air. One of the interesting things that we're seeing in a lot of constellations now is the ability to have inter-satellite links. So laser is one way of doing it, for example. So you potentially can pass the data straight up to the satellite, over to another satellite, and then back down to the ground, either through a user terminal, which is to someone's house, or to another ground station where the data can then be passed on via fiber or via ground networks. That's sort of very broadly kind of what we're talking about here when we're saying satellites and sort of data moving around. And that's a kind of a useful theme to think about when we're talking about this. We are really talking about the movement of data and getting data around the world. And I'll come back to that later on, because the reality is that actually has a much broader implication than just the satellite or the space market, because the reality is data is now a huge commodity and a huge part of the global economy outside of this segment. If we go on to the next slide. So this is sort of where I think we now move into sort of what we're actually seeing from a trends perspective in the market. And hopefully this will be of interest to everybody. And if there are any of the points sort of too technical or people aren't aware, do feel free to shout in the chats and in the chat and ask questions, and we can kind of come back to them. But I think there's two key market trends that everyone's seeing. There's innovation and disruption. So it's not a secret in any way, shape, or form that the traditional players in the market have been heavily disrupted by the two tech billionaires of Elon Musk with Starlink and SpaceX, and now with Amazon Kuiper coming on board with Jeff Bezos. You have these two huge LEO constellations, and they are huge, right? We are talking about thousands of satellites, very spinning around the world, very close to the Earth, with huge capex costs that have been financed through various means, but effectively given the backing of the companies involved, primarily through equity. And because of these enormous balance sheets, these companies that are sort of the newer entrants to the market, although that they're not new anymore, they've been around for a number of years, they're compared to, say, traditional players who've been around for sort of 30, 40, 50 years. They've stolen a march, I think, on the market. And a lot of people you'll see in the press talk about that and talk about how that's moving. But actually, that, depending on your viewpoint and depending on how we see things, we certainly see the disruption, but it also allows for innovation. And I think this comes back to sort of multi-Earth orbit kind of regimes and to what you can do with the satellites that you have. So if you talk about a geostationary satellite that has that higher degree of latency but can put through a larger amount of data to a large area, then you can effectively combine that with, say, a MEO satellite, or potentially also connecting with LEO satellite operators to provide a combination of services. Because ultimately, for any one customer, and we have to remember these companies have thousands of customers, there may be more than one service that fits the bill. Someone may have a requirement for LEO with the very low latency requirements, but they also may need something where actually a geostationary or a MEO satellite works perfectly well and is at a cost perspective that can work. So that's certainly one thing we're seeing. And we're seeing a lot of companies move towards cooperation agreements around kind of creating this multi-Earth orbit. The other side of the coin is consolidation, and you'll see consolidation is a huge point, because effectively one of the issues with competition in the LEO market is that people are talking very openly about, can all of these LEO constellations and networks work, and is there a big enough market to provide for them? And that's something that the market will see over time. Some of these providers like Telesat or AST or the very big sort of constellations such as like an IRIS² will all provide different functions to a different segment of the market. But ultimately, there'll be a lot of competition with the likes of a Starlink or an Amazon Kuiper, at least for certain segments. And the proof will be in the pudding as to kind of how many of these companies either need to consolidate or kind of work together in order to be successful. And I think a good example of that is probably that you saw Eutelsat merge with OneWeb, and that wasn't too long ago, sort of for 3.4 billion. More recently, I'd say the press is very clear that the Eutelsat has been supported by both the French and EU and UK governments with various forms of support, because, which we'll come on to, sovereignty and defense is a large portion of what we're seeing as well. And those geopolitical environments combined with space and how people are looking at space is something that is increasingly important to not just governments, but also to the private sector. And that kind of picks up on that point around the importance of the public sector. The capex requirements for these companies are huge. They are private companies, but as you'll see, a lot of them are supported by either the state or in some way, shape, or form the state. So we have, for example, in China, a lot of state-owned enterprises that have their own constellations, and sort of on the Asia side are very focused on providing very good services to a large portion of the world and for different use cases. Eutelsat I've already mentioned, but also we should look to US has its own when it's looking towards the Space Force and kind of what Donald Trump has set up there with the defense spending. An Iris Squared, which is a sort of a project that has a lot of controversial articles around it at the minute, is something that the EU is focused on in order to provide connectivity, and one of those aspects will be defense related resources to the EU. So that kind of links into the trends we're seeing, which is consolidation of companies for survival or for market share, along with sort of innovation and disruption with people coming in, not just Starlink and Amazon Kuiper, but also on the Earth observation side, people coming in and trying to do things differently. A lot of sensor companies that are trying to provide data in different ways and looking at the models differently. Very finally, on the sort of the good, if we want to put it that way, and I hope people are enjoying my puns of the good, bad, and ugly. But the value of ground stations is an interesting one. Traditionally, ground stations have always been financed as part of these constellations or these big satellite financings, but they're actually a large portion of the capex. They are integral to the networks, but ultimately there are different ways of financing that, and we're now seeing that come to fruition. So if you look at people using a leasing model, for example, there's been examples of other transactions in the market, EQT and others, things with RBC Capital, where people have gone in and have tried to use ground stations and finance ground stations, using them for multiple operators and multiple providers, which kind of increases the flexibility of what is a large portion of the network. Very finally, I think it's worth touching on the sort of positives around this is AI, and I don't think we kind of overexert the importance of how important AI and technology is in this environment. What we're seeing is a lot of these satellites are being used for what are called reach apps. So, for example, a good example is something that you use every day, whether it be an Uber or whatever the local taxi app, wherever you guys are situated around the world. Those all function on satellite technology. They're all linked to an Internet of Things and using your mobile phone to connect you with drivers and riders. And all of that is inherently linked to what we're talking about today in space. And that's only going to get bigger as data becomes more and more prevalent around the world. The Internet of Things gets bigger. The requirements and the bandwidth for space is going to be huge. I think to take a step into the bad now for a quick second, there is no doubt that space remains a challenging area from both an equity and finance raising perspective. The good companies, or the companies with good business plans, do receive equity finance, do receive equity. There are lots of VC companies investing. There are huge examples of great returns and great companies that have kind of gone on and done great things. There is also the link between equity and finance, where the requirements for equity are there, and they need to be there to unlock ultimately the financing, whether that's the sort of traditional ECA lender financing, or whether that is a financing through other means, whether that be private capital. But I think as constellations have become more prevalent, and as those equity requirements have become larger, because the constellations now require billions of dollars to launch, there are different ways of capturing those CapEx requirements and carving up networks. So that effectively portions of a network are launched, for example, as sort of not test cases, but cases that can generate revenue, generate backlog, in order to kind of provide a test case and to get rid of a lot of the market risk, for example, which is one point, and also technology risk. De-risking constellations before more financing is sought is one way that we've seen people start to look at things, because the reality is raising billions in equity to obtain billions in financing is a challenging venture for a lot of private companies. The other sort of challenges the industry faces is sort of linked to my consolidation point. There is a lot of competition, and if you split competition into two markets, the sort of Starlink and Amazon Kuiper, which I've spoken about quite a lot, but also if you look at the sensor companies and you look at Earth observation as a market, a lot of those companies were looking at SPACs and IPOs traditionally and in the past. And the reality is that it's been very difficult for those companies to grow at the rates that are required in order to meet those exits. So we're seeing a lot of Earth observation companies using different sensors, challenging in the same markets. Some are hugely successful, but there is a lot of people and a lot of companies providing similar services in similar sectors, and the customers and the markets will determine that competition and how it's seen. But the evidence of the commercials so far has been that the growth has not been sort of 20% plus, which a lot of people previously had projected. Finally, just to touch on the other issue in the industry, I think is no secret again, is the sort of the expensive nature of insurance, particularly sort of on the in-orbit insurance side. So for those that don't know, insurances in the space industry are typically split between launch services and launch insurances, and then in-orbit insurances. On the launch side, because of the dominance of a SpaceX and the Falcon 9, the launch insurances for that are actually relatively reasonable because of the lack of failures. The in-orbit insurances are still remain very expensive and remain challenging, to the point where some geo operators were saying to us recently that they were also looking at the concept of self-insuring because of the premiums. And in-orbit insurance sort of leads nicely on to sort of the ugly, if we can follow the analogy, which is as more and more satellites are launched, as more and more things are put into orbit, there is the more and more likely chance of potentially a collision, but also space debris. And space debris, I think, is a challenge that the world needs to face head on. And I think there is work being done by various companies around the world to sort of deorbit satellites, try to clean up space debris, and that's a market that we certainly see growing. But it also links to kind of the liability and regulation of space, which, to be brutally honest, is out of date. The outer space treaties and various treaties that I won't bore the audience with, sort of from the legal side, are largely focused on states launching items and state-funded enterprises, which in the modern world where the private market is providing huge amounts of capital and huge amounts of players in this industry, is very out of date. So that's something that we certainly see changing in the next 5 to 10 years, but it also requires lots of cooperations from states around the world, and unfortunately, it doesn't seem high on the agenda for lots of nations, but it is one to watch out for, particularly if we have a collision in the near future, because liability around collisions will be very unclear and probably likely to be very unequitable from the perspective of what occurs. If we can move on to the next slide. Just very quickly, I'm going to run you through some sort of structures, one on corporate financing, one on project financing, and then one at the end on securitization. This is nothing that I think people won't have seen before. The reality here is we could have drafted this a million different ways. Corporate finance is one way that we have seen the industry finance. This is likely a traditional method. This is based on essentially the satellite operator's balance sheet and credit. And essentially you have variances here, whether that be capital markets issuances, whether that be sort of traditional bank finance, but it's very much focused on credit. And you can have a security package that looks at, say, one geo satellite or a certain group of assets that the company has. But you also can have the true sort of corporate financing where you're looking to, as part of a syndicate of lenders, restrict what the satellite operator company may do, and they may have, one or two facilities like this that fund all of their capex and opex requirements. So there's not too much to focus on here. If we move on to the next slide, this is the sort of leasing model which we have seen used particularly for ground stations, and also there's a lot of talk about this being used in the satellite industry in particular, and it will be an interesting viewpoint. This is a classic sale and leaseback. So you'll see the satellite operator sells the satellites that it has or the assets, whether it be ground stations, to an SPV lessor, and the lessor is guaranteed by the real lessor credit entity. And what you're seeing here is something that's akin to aviation and something that's been done in lots of other markets. So aviation's one, maritime is another. This is a classic asset financing structure where you have repayments coming up from the customers paying the lease rentals between the lessor and the satellite operator. And here again, all that's really happening is that the capex requirements are moving to the lessor, and you're getting the benefit of all of the liability and all of the operations remaining with the satellite operator. So it should work for both parties. And this is certainly something that we see as increasing. If you draw analogies to aviation outside of aerospace, for example, 25 years ago, 30 years ago, the lessors were far less prevalent and important to the market than they are today, where you have effectively the market dominated by leasing companies. So this is certainly a model that we see increasing. If we flick over to the next slide, this is the traditional rocket science meets project finance structure. This is how a lot of satellite companies have traditionally financed themselves, particularly when they're going into new ventures with high capex requirements. So whether that be a MEO or a LEO constellation, and there's lots of issues and risks that fit into this project financing structure. But to kind of walk you through the sort of the basics, you'll see obviously the loan goes in, the borrower procures the satellites and also procures the launches, and will have a backlog of customers that it is selling its services to ahead of actually launching the actual satellites. All of that will effectively feed into the milestones for the lenders to provide certain drawdowns under the facility. And you might ask the question here as to why we've got a borrower parent SPV and a borrower SPV. And the reason there is so that effectively you can ring fence the entity as best you can. So the share charge is provided by the borrower parent, and because that's also an SPV, it's very clear there that there's no other creditors that to attack not only your borrower, but also your entity that is giving the share charge over the borrower, which is effectively the key piece of security. And you'll see here behind the scenes, there's obviously sponsor support and potentially a guarantee. And then there's a lot of discussion around whether it's limited, whether that guarantee is limited in some way to the project, or the support that is actually given. In terms of other security outside of the share charge, you will take an all assets debenture over not only the accounts, but all of the assets of the borrower, which will include the satellite. And actually, a lot of people say to me, well, what's the point of taking security over a satellite? You can't exactly go and repossess it, right? Because it's up in the sky. And that's not quite true, actually. We have repossessed satellites before, moved them to different orbital planes. And it's actually much more simple than you think. If you have access to the codes and controls to satellites, the repossession procedure can be quite simple. There are caveats, as always, with a lawyer. I can't give you a clean answer to that, but there's depending on how specialized your satellite are, there's lots of other factors, but it can be more straightforward than repossessing an aircraft or a ship, for example. If we flick over to the next slide, I think this is where we're sort of taking an outlook to what's going to happen in the future. And there's a few points I wanted to make here, just for everyone's benefits. I think when we say lessons learned from other industries, we also do a lot of work in the data center space. And it's very true that when you look at capital inflows into the satellite or the space market and capital inflows into data centers, and this is where I was drawing the analogy with data earlier, data centers are hugely financeable, particularly those that are backed by hyperscalers, and the cash flows into that industry are enormous. Space, unfortunately, doesn't have the same benefit. And there are slight differences between the two industries. The hyperscaler contracts are obviously backed by very strong credits. They tend to be slightly longer in length than some contracts that happen in the space market. But ultimately, I think the space industry can learn from there and actually moving cash flows, and that's what we're seeing with a lot of investment banks, moving cash flows that were traditionally going to other industries such as data centers into space is something people are very focused on, particularly as their credit lines fill up on data center risk or certain hyperscaler risk. The other one is AI and innovation. So when you look at sort of GPUs, data centers, lots of things that have been used previously and driven huge amounts of growth, a lot of that is directly impacting space. So a lot of space companies talk of themselves as data companies and they're using data, whether that be sensor data around methane in the air, whether that be sensor data around kind of Earth observation data or video back to the Earth. A lot of these companies are trying to use different models to not only have the capex requirements of a traditional space company, but also have huge revenues and huge markets outside of those traditional verticals we're talking about, whether that be telecoms, whether that be aviation or maritime. And then I think just picking up on the financing side, we're seeing a lot more of private capital and alternative investment come into the market, particularly and sort of combined with this, and I'll show you the final slide in a second, which will talk through the securitization and capital markets elements. We are seeing a lot of that investment coming in and people having appetite for space and taking on a little bit more risk than, say, traditional lenders, but structuring it in a way that provides them with more upside. So examples being securitizations, for example, at lower LTVs, or alternative investments where, say, a portion of the margin or a portion of the return is driven by sort of equity or is driven by returns there. And we're seeing quite a few companies, whether it be trying to integrate themselves into companies earlier at the VC stage or Series C funding, before they kind of then go for full-scale project financings or exits. So that's kind of the interesting themes that we're starting to see offshoots of, and we expect to see going forwards. If we go to the last slide, this is just us talking, and I won't spend too long on here because I'm conscious I'm over the time, but just to give you a flavor of securitization here and how we see this working. Capital market securitization has been used widely in not only data centers, but also lots of other industries, predominantly in the US. And we are looking at this and sort of seeing very stable, strong cash flows from space as kind of a generator that there's no reason why you couldn't have a securitization for space companies. And that's certainly one way that we're looking to finance. We've done a lot in the securitization space in other sectors, and we're looking to bring that to the space industry and working actively with a few investment banks on some opportunities there. So that's sort of, I think, where I'll hit pause and open out to questions, if there are any.
We're on to our next part of our seminar. It's a panel session, and first of all, I'd like to introduce our panel speakers. Professor Dewey Yee is a professor of the Department of Logistics and Maritime Studies at the Hong Kong Polytech University. He lectures on aviation management and finance. He established the first space commerce curriculum for Polytech University in 2022. He leads a team of university students developing Space 50, which is an index to benchmark the new space industry, and plans to develop a new spacecraft leasing platform. Professor Yee is a founding partner of Anchor Venture Partners, a private US-based investment firm that focuses on investing in the space sector. Previously, Professor Dewey Yee was part of the Hong Kong Aerospace Finance Task Force, which contributed to the enactment of the new Hong Kong tax concession regime relating to aircraft leasing companies and managers. Professor Yee has also taken on many professional roles. He's worked on the US Securities and Exchange Commission. He's been assigned to the Beijing-Washington Sister Cities Committee. He's worked for this famous GPA, which is the Guinness Peak Aviation in Ireland. And for those that are familiar with the aviation industry, this is one of the founding leasing companies which really pioneered aircraft leasing globally. He's also the CEO of he's been the CEO of Credit Agricole Lazard Financial Products Bank in Singapore, and also the CEO of China Everbright Aerospace Holdings. In a career spanning 4 decades, Professor Yee has held senior positions in leasing, investments, and financing institutions across Asia. Please welcome Dewey Yee. You can sit here. And I'd now like to introduce Mr. Ron King. Ron is the managing partner of Perpetual Space Ventures, a venture capital company focusing on investments relating to space technology businesses. He's an engineer by training. He also manages a family office portfolio, which invests in private equities and stocks, in semiconductor and space technology assets. Ron previously worked for the Securities and Futures Commission of Hong Kong and was responsible for policy development in the fintech and crypto asset industries. Ron has held senior trading positions in various financial institutions, including Standard Chartered, BNP Paribas, and Nomura, among others. Ron also has a master's degree in space systems engineering from Johns Hopkins University. Please welcome Ron. And so we also have Randeep joining us for the panel session. So thank you for participating. For the benefit of our audience, because I think our audience is structured around those that are expert in the industry, have been in the space industry for some time, but also we're trying to encourage new participants to gain knowledge in this industry. So the first series of questions is really to ensure that the audience all have a basic understanding of what we're talking about in the context of space. Randeep mentioned some players like players in the space market, like the manufacturers, the launch service providers, the export credit agencies. But what are some of the other core market players forming today's global space community? Maybe I'll address the question to Dewey first. Or Ron?
Okay. Well, basically, the ecosystem of space is quite huge. And for convenience, we kind of divide into four particular pillars. One of them is the launch system. That means the SpaceX rocket lab of the world, and also the companies that try to do exploration. That will include intuitive machines that try to explore the moon, and some other exploration companies. That's one pillar. The other pillar will be about the traditional industry that has been doing space as part of the business, such as what Randeep said. Let's say Lockheed Martin, Boeing. These are traditional companies that have space as a business line. The third one is the topic of the day. That will be the satellite companies, and that will include communication services, Earth observation, and all kinds of things that you need to leverage on the satellite communication and data generation power to benefit the user on Earth. And the fourth pillar is a little bit different. It's about everything else that supports the development of the space industry. And we are seeing a lot of high-end manufacturing that helps to do manufacturing components of different space systems. So that will be something that is kind of mixing everything together. You see the nuclear design, nuclear reactor design used for the space system. You'll see new materials being used for space system infrastructure, and also certain research and development processes. And you'll see a lot of things about biomaterial, biomedical things that supports the life of astronauts who will live in the space in the future. So these are the four basic pillars that we, let's say maybe myself, used to kind of like classify what's going on in the ecosystem.
So against those pillars, and you being in the venture capitalist industry, supporting, trying to find investors, how do you maybe navigate what type of pillars that you would prefer to focus on? Is there certain pillars that you would concentrate on?
Yeah, because like for one VC fund, we have to respect what the LP are looking for. So they're looking for something that is not too difficult to understand. The risk will be controllable, and the capital will not be rate intensive. So let's say for the time being, we will focus a lot more on the maybe software, cybersecurity, and AI. So that these are not a stranger for VC for quite a while, and those applications can also be used in space. So it will be more like a natural linkage between the high-tech world and space, which will be easier to be digested by the limited partners. For other space areas, let's say after the investor have learned, let's say become more experienced in this space, then we can try to look at something which is slightly more fancy. That will be something about the, let's say, satellite rocket. But again, it depends on where we are and what kind of market, which market we're looking at. If we are in Asia, maybe we have to be very selective. We cannot see, okay, there may be a rocket company in Thailand. It will be a little bit far-fetched. So we have to select our battle, see what kind of investment opportunity will be the best for our investor.
Okay. And Dewey, do you have any other kind of stakeholders or participants that you think are important to mention?
Let me bring you back to 2022 when I got an invitation to teach full-time at Farley U, and they wanted me to teach aviation for obvious reasons. And then I remember the first class, I saw these bright young minds that were unaware of what they wanted to do for their future. So that I proposed to the university, they should have a new course in space commerce, because that's something that most people just don't understand. You know, what's in it for me? And as an educator, make them aware of the opportunities, because one day some of these kids will create something that's $1 billion company that's focused on space. So my purpose is to raise really more awareness. That's number one. And number two, how do people in the audience, how would you profit from it? How would you either get a job in it, create a job in it, or make money in it? So making money to me is maybe the easiest, because if you know where to invest, if you knew that, you know, Apple sounds like a really cool company, or Nvidia sounds like a cool company, and maybe 4 or 5 years ago you bought it, or for Apple, maybe you bought it 30 years ago, you can see that you didn't have to do much. Very much like what Warren Buffett said, that if you don't let your money work when you're sleeping, you're going to work when you're awake till you don't have to work anymore. So that was the concept in my mind. So with a couple of, when we started the space commerce course, I got some of the students to work with me and develop an index. They said, let's take a look at all the space companies in the world. There are about 100, 150 that are publicly listed. There's 10,000 space companies that are private. That's just too much. We don't know anything about them. So we looked at these companies and we said, okay, let's whittle it down to about 50 publicly listed companies. Most of them are in the US, about 80%. And let's look at, let's create an index, a portfolio, right? And we did. Now, some of them are very good. Like one company, we bought at $4 and now it's $54. Another company, we bought at $154 and now it's $1.70. So, but the $1.70 ones, we really didn't know how to examine it. I think with what we've learned in the past 3 years, now we know what to look for when we're looking for dog companies, right? And now we know what to look for when we're looking for those companies that represent the future of the space industry. Well, okay, what is space? Well, space is maybe one day us sitting here on the moon having this kind of conference, right? Space is everything and anything that's on Earth right now that will be off planet in the future. And that's the opportunity for everybody. So whether you want to invest in it directly with public companies, or you want to have an idea to create something that's linked to space, this is the opportunity, especially here in Hong Kong, especially in Asia, where the people are a little bit behind the curve. So why not get a little bit toward the front of the curve and make the opportunities for yourself? So that is a really a roundabout way of answering your question.
No. But you've also segued to the next question, which is how do we monetize on this space industry? So maybe you can try to provide some guidance there. I know that we've talked about satellites, but maybe we need to understand how companies actually go about making money in the space industry.
Okay, making money is really super hard. because number one, there's two things. There's upstream and downstream. So upstream is getting this piece of equipment into space. That is super hard. And there's not a lot of companies can do it. Governments have been doing it for many years, but not a lot of governments have been doing it, right? It's not something that you can perfect. I look at poor JAXA, right? JAXA is the Japanese, the space company. They're having a hard time getting this rocket up to space. You know, India, all these companies. Even NASA had problems way back when. And then here comes along Elon Musk, and he's now sending rockets up every other day. You get a couple like Rocket Lab or some of the other ones, and they're still having problems. I don't know where it's going to be in the next few years, but I would not bet on new players coming in, right? Because it's really difficult. With respect to stuff coming down, right? I'm not talking about the debris, right? It's really what you can see from up there. It's really about data. I don't know if you've heard of a company called John Deere. They're very big in making agricultural products in the United States. The CEO had an idea many years ago that why don't we use satellites and link it to our farming equipment and then have it all automated? Why? Because the satellites can see parts of the field that are not really being serviced by these humans, right? But the machines can service it much more efficiently. And now they're one of the biggest companies in the world that's relying on satellites to automate their farm equipment. And I mean, the list goes on for the opportunities. The beauty is it's up to you to decide where you want to look at and then maybe create a revenue model for yourself. But I would start with the publicly listed companies first to get your feet wet, to understand how to invest.
Okay. What about you, Rod? What are your thoughts?
Okay. I agree with what Professor Dewey says, and I just want to add on another angle about how to monetize the space technology industry. Actually, we can take a step back to look at the revenue not coming from the front line. That means the analogy is more like in the AI industry, you have the Facebook kind of the world to make use of the data, to sell data, right? And why not focusing on NVIDIA, who provide the equipment? So in the space industry, we can also look at the value chain of the high-end manufacturing. It's like the people who provide the hardware for the space company to build a space system. So this will be something which is more practical, a little bit more traditional, and the cash flow will be a lot more predictable. Because on one hand, this company can sell their product to the space company, and also can sell these high-end products to another industry as well. So these are something we'll be looking at. And also, we can look at something which has dual application. For example, I mentioned before, certain medical devices, certain new materials, it can be applicable in space station, let's say. These things will also be applicable on Earth. So for companies that has products that can be dually used in space and on Earth, that will be something more reliable for investors to invest in.
Okay. And maybe Randeep, do you have any thoughts in terms of monetizing in this industry? I think you did mention a whole host of things like Earth observation. We obviously use satellites for communication. GPS systems are all, highly dependent on how we function. What are your thoughts in terms of how you're seeing parties making significant money from this industry?
Yeah, no, thanks, Jackson. It's a real variety, I would say. So a good way of looking at it is data, but that's the sort of point that we were making with data companies. So you've got a lot of satellite companies who are, using the tech and doing the upstream, if we're using that terminology, and providing the satellites up in the sky and then providing services down. But you've also got a lot of people who are trying to make money using other people's services. So you buy the Earth imaging, Earth observation data, and then you provide AI overlays, for example, or you use that data to combine to create maps that you then sell to your customers through subscriptions or through other models, and whether you overlay where the methane is or where gas leaks are or where agriculture is not being used effectively. John Deere is a good example, but there's other companies that are using satellites and data in that way. But equally, if you're one of the companies that is providing the services, so let's take a OneWeb or a Eutelsat, for example. You've got loads of customers that are trying to make use of your LEO services, but you've also got geo services that you're then selling to the more traditional broadcasters, telecoms. And we also have to remember a company such as, say, O3B, a lot of its revenues are coming from the other 3 billion people in the world. That's what the name of the company was there for. There's lots of people in Africa and other parts of the world in remote regions that don't have access to broadband or to the internet. And that's what these space companies are providing.
That's really insightful. I mean, the other thing that comes to mind is also the market of autonomous vehicles, and I think that kind of touches on the data aspect. I think sooner or later, particularly with Elon Musk moving the way he is, he's got his own data in relation to what the Tesla vehicles are able to generate. But I think with the SpaceX kind of link and network, it really will be quite pioneering in terms of how autonomous a lot of our services and functions on Earth will in fact operate. So let's move on maybe, and I want to maybe focus on some industry trends. So maybe a question to Ron first. I wanted to understand a little bit more about how national agencies, whether it be NASA, China National Space Administration, or even kind of local, more less recognized national agencies plan in providing support to private sector investments in the space industry. How important is that?
I believe that is super important because a lot of the developments for space tech are actually driven by the demands from the government. Let's say from the space agency, from the departments of defense, from the departments of agriculture, so on and so forth. Let's say for NASA, I think they are in the very forefront because they can outsource basically the whole mission to a private sector. So they become the project manager, and the private sector become all the supplier to put the mission together. So this is a very good model to save money and make the process a little bit less bureaucratic and technologically more efficient. And for ESA, the European Space Agency, they are using like a mixed model. They may be leading the developments of the core parts of the project and then subcontract certain things to a private sector. So it's like one step behind, not say one step behind, but it's not as efficient as what the US has been doing. For the development country, let's say for JAXA, the Japanese one, they are using a co-development model. So most of the launch right now is co-developed by JAXA and Mitsubishi Heavy Industry. So all the rockets has been made by the JV of these two entities. And I think Honda is now coming. It's like moving forward. So that will be exciting for Japan ecosystem. And Japan also give a lot of grants to support their private sector startup as well. So it's also a semi-efficient system. And let's say for China, it's very special. They welcome private entities to help the development of the mission, but all these private entities will be approved by the China government. So they have their own policy to do these kind of things. And I believe that once, let's say, the China government have a policy to actually do the liberation for the private sector, it will grow very, very quickly because China has everything for the high-end manufacturing ready. So it's just maybe waiting for the decision of the top management of China and see how it goes. So the policy and the involvement of the government will be very essential. And right now, I'm looking at the ASEAN ecosystem because a lot of the emerging countries want to have their own space tech developments and also their high-end manufacturing to be developed in their local country and try to be more independent from the supply of the foreign country. That's what they are looking at right now. And we believe that there will be a lot of opportunity in the emerging country as well. And
Okay. And maybe, Dewey, a question to you and bringing it a little bit more local. How are you seeing the Hong Kong government kind of encourage the space kind of financing or space technology industry in here? I think you've been part of some associations locally.
Yeah, I think Hong Kong definitely should leverage on its strengths and its strength as a financial center, as a center with the best professionals in the world in accounting and law to support. They should probably start making this sector a little bit aware of the opportunities for them to dip their toe into creating space investment products. Maybe start with an ETF, maybe take a look at some of the private investors, getting some of the family offices to take a look at what's there to learn about space. How do we benefit? How do we profit from it in the future? I would say that's the best way for Hong Kong to go forward. Hong Kong can't really lead it, but it certainly has the very, very strong infrastructure to support, especially the capital markets.
Okay. I'll move on to the next question. And I wanted maybe to get an idea of how you would describe the current state of global capital flows into the space industry, particularly the satellites and the constellation projects. So maybe I'll ask Randeep if you have any thoughts in relation to that first.
Yeah, sure. So I think there's you have to draw a distinction here between the sort of large scale big companies, particularly the US companies, tend to find it easier to obtain capital flows, whether that be equity or whether that be financing. And I think the nature of that is just the government support and focus on the space industry that traditionally has been there in the US. I think if you then move more broadly to sort of say Asia or to Europe, it's a much more patchy outlook. And I think the reality around the availability of capital for large scale companies is still probably relatively good. I'm thinking of the likes of Tycom, I'm thinking of the likes of AsiaSat, Space 42, people like that in the Middle East. But then when you're looking at the smaller market, sort of the Earth observation companies, and particularly from a venture capital side, a lot of the space Series B, Series C funding rounds are very dependent on the company and the tech that it's bringing and the problem that it's solving, right? Like if you are another Earth observation company with similar sensor technology to others and you're entering the market now, I think you may have quite a tough time raising capital. You need to sort of differentiate yourself. But if you are pitching yourself in the right way and you have a USP and you're particularly I think with a lot of the VC guys now trying to sell yourself more on the data side, the opportunity is still huge.
What are your thoughts on I think you're more focused on the ASEAN region. Is there any kind of capital flow trends that you're seeing?
Well, so far, maybe I do not see a lot of capital flow. Maybe that's why I would like to venture into there to get the first mover advantage. Just to be frank, you need to really understand the local system and have the local partner to help the VC fund. Like my major decision to go venture into the ASEAN country is that I get a very good local partner. He understands the nuts and bolts about ecosystem and also have the relationship. Because for my VC fund business model, I do not use the same group of people to run different funds. Every fund in space tech will be very localized. You cannot have the same crew to run, let's say, an ASEAN fund, and then use the same team to run a Japan fund. It cannot be done like that. Maybe right now, at least. So we need to have a specialist for market, for particular market to handle it. So in terms of the capital flow, I believe that Singapore has the capital, but how the flow will be directed will up to the VC and whether they can pick up a good story or pick up good investment. And the investment will be highly dependent on the local policy, the local ecosystem. So it's really depends.
And Dewey, any comment from you?
No, I think Ron's outlined it very, very well. It's all about education.
Yeah.
People really need to understand what they're getting into in the beginning. I think it's not just the risk, but the real reward down the line.
All right. And maybe a question for you, Randeep. You know, you've worked in the industry in Europe. I just wanted to get your thoughts in terms of what sets maybe the APAC space financing environment apart from, you know, other regions like the US, the traditional markets, the US or Europe. What are the, you know, some of the characteristics that you see in relation to this industry vis-a-vis APAC?
Yeah, no, I think we shouldn't downplay it, if I'm being brutally honest. I mean, we've done stuff with Meersat, I've done stuff with Tycom before. There are lots of good space companies that are at the forefront of the space industry within Asia, right? Like, I mean, Mitsubishi Heavy Industries is probably one of the best launch service providers, alongside someone like SpaceX, for example. So I think the space industry is still one in Asia that is there and is booming. Perhaps there could be more publicity around it, and more of a focus. I mean, the reality that's true of Europe as well. The only kind of region I would say that is trying to rival the US with a focus on space and publicity is the sort of Middle East, where, you know, space is a huge part of the way that Neo Space Group, KSA, other countries, the UAE, see the future, and the investment going into that industry is enormous. And that goes two ways, right? Because it's not just investment, but it's bringing skills and jobs to that country. It's bringing the knowledge that is gained there as well. So I think globally, this is the world, you know, looking at things slightly differently. And I think the US has always had that higher risk tolerance and appetite. But that's why it's kind of important, I think, to draw distinctions between the space industry and other industries that receive lots of capital flows, like data centers, like other similar regions, where as long as you're looking at the cash flows and you're looking at companies that have good equity and good backing and have good ideas, this isn't inherently any more risky than, you know, depending on where you are in the sort of startup journey, any other company that a VC may be investing in, or any other company that that lenders are sort of financing that has good cash flows?
And then maybe trying to find some distinguishing features. How important is regulation there? I mean, you talked about teaming up with your local participants and them understanding the markets, them understanding the regulations. How important do they have an influence in terms of understanding the regulatory aspects?
Yes, extremely important. Because, well, I was a regulator in the past. So regulation impacts a lot for the market participants. But let's say for the space industry, we need a very consistent kind of regulation or expectation from the space agency and the government, different government division, how they are viewing space as part of their national agenda. If they are just doing experimental effort, that means maybe we need to wait for quite a while for the space ecosystem to get mature. If they are very have a strong determination to, let's say, build their space effort to get independence from the, let's say, Western space influence, or they really want to develop their local manufacturing industry, this kind of policy, then that it will uncover a lot of good investment opportunity that you may need a local tour guide to help us interpret what exactly is going on, which part of the ecosystem may be moving faster than the rest. These are the very important consideration for us to make a better return for our investor. If we just go in as a foreigner and then just try to sprinkle money and hope that 2, 3, or 4 of the investee company may become, the drive of the return, it is not a very good VC model for the Asian country. We need to be really understand what's going on and then make the correct bets on the most promising candidates in the ecosystem.
So how do you try to get more support maybe from the government? Are these participants that you're engaging with, are they lobbyists? Are they close to the government? Because I think,
Okay, I believe that we need to understand the agenda of the space agency and the government department, what exactly they are looking at as short-term analysts. So we will know that which company who may have been working closer to this agency, who may have getting the grants from this agency, has been successfully developed at least partial of the mission. Like, these are the companies that we will take a good look. And these are the kind of special information we can get with a local partner. Otherwise, if we just rely on, let's say, consultants report, industry report, that may be a little bit too far away from the truth of the ecosystem.
Mm-hmm.
Let me jump in and give you a real example. Right now, there is a aircraft leasing tax regulation, right, governing the assets if you're going to register the assets here in Hong Kong. Right? But it doesn't extend to spacecraft in the future. Well, how does that work? Well, let's say China is launching these reusable rockets, and this company is looking for a way to finance more of these. And they have a very good track record, let's say, like SpaceX. Right? So this theoretical leasing company, spacecraft leasing company, could actually take a very serious look at the asset itself, assign a value, and say, okay, we'll buy these reusable rockets from you, and we'll lease it back to you. And the Chinese government is going to say, well, you're not going to register in Ireland, right? It said, no, we're not going to register in Ireland. We'll register it here in Hong Kong because there's a space protocol, right, for that. But then we can't do it because the protocol it covers aircraft, but it doesn't cover anything a little bit above. So again, leveraging on your strengths would be let's get an amendment to that protocol so that in the future we can register it here. And then people, once it's registered here, then what happens is that, oh, well, I want a piece of this because it's generating revenue. So, okay, well, let's somehow securitize it, put it into the capital markets here. There you go. You got a new revenue stream for people to actually start making money in Hong Kong just by a change of the tax law. It's just an amendment. That's it. So those are the sort of practical things we can do and take a look at.
Okay. I want to move on now to maybe talk about risks. I mean, we've heard about some of the issues relating to launches. Actually, we were made aware in Australia last week there was a launch that was unsuccessful. So I think this area of space is in fact a very risky business. Some would say is a risky business. So how do we try to, what are some of the key risks that you see, and how do you think some of those risks could be managed?
I think from my point of view, everything and anything related to space is very risky, right? Maybe you got the satellite up there and it doesn't work, right? Maybe there's something else. Maybe there's something else. We can quantify it, but you need a model, and the model is SpaceX. Why does SpaceX stuff work so well? Maybe because they don't rely on outside people. The engines, they make it themselves. In fact, they print the engines using 3D printers. They don't outsource. So maybe that's a way to eliminate risks. And I think personally, from your own experience, you know that sometimes the biggest risk is when you leave your responsibility up to somebody else to do. And then it doesn't get done. But I'm talking a little bit more from an academic point of view than a practical.
Well, let's get the lawyer's view. Randeep, what are some of the risks, and how do you think they could be more effectively managed?
So I think again, like there are lots of risks, right? Like it would be unfair to say this is not sort of a risky industry, but there are ways of managing them, right? So launch risk, for example, is the easiest one. Because really launch risk, you have to look at it in two ways. If you have a launch failure, you're very likely to receive insurance proceeds back for that, and then it's all then just a question of the timing of when you get those insurance proceeds and really the onwards effect that has on your project. So if you're an Earth observation company and you have 2 satellites up there and you're launching your third in order to provide better services to your existing customer base, and there's a delay of 2 or 3 months because either you didn't have a spare satellite sat there, or you had some other way of launch, you didn't have another launch a slot or anything like that, that may have a large impact on your customer base. The sort of, the worst case scenario is kind of a big project financing where you have a large failure of, say, 4, 5, or 10 LEO constellation satellites that then has a large impact on your overall timing because you have to go and manufacture them again. You maybe not have set that back. The ways of mitigating that are quite, there are strategies. So you can have spare satellites on the ground ready to go, for example. You can have backup launch service providers is another one. Because the reality is, it's all about timing in these projects. And as soon as you get your satellites up and actually providing you data, then you can generate the revenue from your customers. I mean, a good sort of war story on this to kind of talk about was we had a $250 million satellite launch. Just launch was successful. It took time. It got to its orbital slot. It opened up. Everything was fine. The data was received back on Earth. And so the launch service insurances fell away effectively. And over the course of, say, the next couple of weeks, people decided to find out that actually the service was degrading. And the reason the service was degrading was because of a $10 resistor that had been tested on Earth had not been tested in a radiation environment like space, so it was degrading over time. And actually, that $10 resistor had a huge impact on the power of the satellite and therefore the output of it, and effectively reduced its capacity by about 40%. So those are the type of risks where if you have in-orbit insurance, that's one way of mitigating, but like I was saying, is very expensive. But those are the sort of things that I think inherently make space a little bit more risky than some of the other things. But it also depends on whether you're in VC land or whether you're kind of in project financing and your appetite.
And maybe Ron, let me get your views on risk.
On the VC land, the risk is very specialized. Like let's say when I was doing derivative trading in the past, you need the trader need to understand what's going on, all the Greek letters, like all the technical things that you need to manage your position well. So we always said you cannot have an accountant to manage a derivative book. It doesn't work like that. Or the space tech investment, the ideas actually goes the same. You cannot have a traditional fund manager to look at the space tech companies, because for a minor step that they have done wrong, the project blows up, the mission will be decommissioned, over. And the space agency may lost interest because you're not qualified anymore if there's a big mistake. So let's say for our team, each of us are engineer. So let's say when we are looking at a project plan, when we're looking at the flow chart, we know what's going on. At least we know the terminology. We don't have to, pick up from the dictionary. The finance part is easy, but the technical part is hard. When we look at the space system, it looks like all the physics and chemistry, not biology, chemistry has been, used in a particular space system. So for us, having the right background to de-risk an investee company will be the paramount for our investment. And the way to do is we cannot use the traditional way. Let's say we invest in certain amounts of equity, take a board seat, take an advisory role. It doesn't work like that. If we do that, we are kind of like in a very passive situation. So what we are trying to do is to maybe use the co-development model with the investee company, actually to walk through all the process with them and try to ensure things, at least to the best of our knowledge, has been done correctly. And that's why we cannot use the typical venture capital investment model to invest in 30 companies, hoping that 5 will get the best result. We cannot do that. So instead, we invest in an armful, maybe 6 to 7 companies only, but we can say hand-holding, but we work super closely with them, not using the typical model. It's not sufficient for space tech VC investments. Otherwise, we will face huge risk for managing investors' money.
Okay.
And I would echo. I totally agree with that. Actually, that you really need to understand these companies to make the investments in the appropriate way, and also their business models, right? Because you can have the best idea, but if you don't get to commercial revenue, like there was a company that I was talking to the other day, who I won't name, but their entire model worked on the basis that they were going to launch satellites that were going to provide video back to Earth in real time, but they were going to provide it for free, and we're looking to use that to leverage marketing and other things, which it's very difficult there if you're an investor to see the immediate revenue or to see the kind of immediate return. So you do have to understand these companies inherently in their technology.
And Randeep, I want to ask you the next question. In fact, I want to talk about how financiers may be able to manage and mitigate risk. And I know that you're also an aviation practitioner. In the aviation industry, we have this thing called the Cape Town Convention, which is which is basically an international convention where member states ratify and are able to have aircraft registered on an international register to recognize security interests against an aircraft or an engine. I understand, I'm aware that the Cape Town Convention also extends and has a space protocol, but that hasn't been taken up like the aviation industry. There's not many members who have ratified that. But what are your thoughts about how that might be, applied in the space industry more broadly, and whether there's, your views about that success or not?
Yeah, no, I would say without wanting to sort of be too negative about it, that it sort of had very, very limited impact. I mean, I think in aviation, there's a clear route for that to sort of assist with repossession and enforcement and give sort of clear protocols around that. I think space is inherently a slightly different market in the sense that a lot of this is looking at cash flows, project finance-esque, and trying to protect as the lender how you see your risk. And really the key risks that people are focused on are obviously technology risk being one, but that's largely driven by the story the operator has to tell and sort of market reports. But the other is real market risk, right? I mean, particularly if we're in the world of Earth observation or kind of different markets, particularly also on the LEO side, you really have to be able to, through your contracted backlog, justify and show to lenders that when this stuff is launched and is up there and is providing revenues, those revenues are going to be sufficient to repay the debt, and then whether that's a sculpted profile or whatever that debt profile looks like. Because ultimately, particularly if you're a lender, you don't have that same upside in the sort of growth of a company that sort of the equity does, and sort of those stories that people sort of sell or say as part of kind of equity raising are not the same when you kind of come to talk to the ECAs or to project finance lenders.
Look, I want to move away from risk because I'm conscious of time and really talk about opportunities. So maybe a question to you, Dewey. Where do you see the greatest opportunities for investors seeking exposure to the next phase of space infrastructure development and financing?
I think the opportunity first starts with education. So maybe I'll bounce that question off and ask the audience, what do they see are opportunities, or do they have any questions on how would they start to get into space, whether you're investing in it or you're setting up a new company or et cetera. I'm going to ask James. James has been a space reporter for a number of years. I'm going to put you on the spot, James. What do you think about all of this?
Yeah, I think the beauty of it is it's something almost on your own. I think not to be afraid. There's no organization that's going to give you permission to take part in this industry. So that's been my view is you can do a lot on your own, even, or your group of students doing the index, for example, which is very interesting. And I did an index of sustainable space firms, looking at 100 listed companies, for example, and how sustainable they were. And I didn't make any money off that because I should have done what you did and invested in them instead.
Right.
But these opportunities are there. I think in Hong Kong, it can seem a bit cliquey in Hong Kong sometimes. You've got to be part of the right set. So I think that's something that as an educator or some of these associations can try to open it out a little bit more. To make sure that people know that they can just walk into this and start doing stuff. Right. Okay. Well, thank you very much. Is Brendan still here? Brendan. Oh, Brendan, Brendan represents UOB family office.
maybe I'd like to hear what do you think of it?
In my circle, I
Yeah.
do hear family officers talk about ventures, space ventures, basics, etc. But they don't usually talk about listed stocks.
Okay, so the family office people would be more interested in the traditional publicly listed companies, and not more
well,
risky.
They would be if we tell them the good side of it.
Okay.
But the thing I want to emphasize is the media isn't really talking about much space.
Right.
You don't hear that much in Bloomberg, local financial. But that's what's driving stock prices.
Okay, maybe we should form our own media company and just promote space. There's an opportunity. Okay, so I've bounced the question off of other people. Yeah.
What about you, Ron?
Yeah.
Because let's say I have to surface my investor, so my opinion can be biased. But I mean, for general public, if they want to learn about space as the next frontier for investment opportunity, just go buy some stocks and get screwed. Become painful. It's how I was trained as a trader. It's like my boss told me, okay, you want to train, or you want to trade, you want to learn, become a trader, do not do paper trade. Buy some futures contract, do some trading. And I think space, we can do the same thing. Let's say you invest in a space company. Maybe after a release of earnings, the stock goes up or down 20%, and it's totally not related to the earnings, maybe related to something else. By being painful, you will dig up what's going on. If you just observe, you just get, oh, okay, maybe the reason is this or that. But if you lost like 20 grand because of a movement, then you will have the determination to uncover what's going on. I think it's a very good learning strategy. Instead of going to classes, instead of going to classes, do some investment.
I think if I lost 20, I would not put any more money into this. I'd be scared to death. I mean, Ron actually gave a little bit of money to his son to trade, and his son is losing, but he's still in, right?
He's still in.
Yeah. Okay.
So right now he learned the risk about margin trading. I told him not to do it, but he did it, so he lost. So yeah, that's how we learn, right?
Yeah, that's how we learn.
For the space theme, we need to get our skin in the game so that we can pay attention to what's going on.
Yeah.
Reading news, reading newspaper, see, like attending this seminar, maybe you don't remember anything after walking out from the door. But let's say if you invest in a stock tonight, you'll remember what's going on.
Yeah.
And Randeep, maybe your thoughts on opportunities?
Yeah, I mean, I think opportunities are huge. I mean, particularly maybe slightly disagreeing with what others have said, but the sort of the startup companies, right? The companies that are really trying to do innovative aspects of, whether it be sensor array, whether it be kind of Earth observation, inherently those companies have a higher stage of risk, but the returns there are also enormous. I mean, if you look at some of the companies like a Seraphim have invested in, I mean, they've had some absolutely huge returns that are sort of enormous, and if you only need to have some of those big winners to kind of justify some of your losers, which hopefully are smaller and less frequent.
Conscious of time, I'm going to accelerate the questions to our final question. But and this is to the panel, and you can shout out if you want to answer. What are your thoughts of SpaceX and Elon Musk and its ambitious plans to reach and colonize Mars within the next decade?
I think personally, China will get there first. right? You know, China has this unique ability of being very quiet, and all of a sudden they do all of this stuff. I mean, I was watching this video a couple of months ago where they were experimenting by lighting a flame in the space station. Now, I know about oxygen and how it burns. That's extremely dangerous, but yet they were able to do it. So if I'm going to put my money on, I'd probably put my money on them instead of Elon.
Ron, I only have one benchmark for his whole project. Like he has been sending stuff, car, people up to the space, but not himself. So once he dare to take the flight himself, then I think he'll be very close to the destination. Not now. Maybe he wants to send some robot first. I don't know. But if he has the courage to take on his own flight, then I will have the courage to believe it totally.
Did Jeff Bezos go up on his own?
The wife.
Oh, the wife did. He did. He sent his wife up. He didn't go up. Okay.
Final remarks from your side, Randy?
Oh, I was gonna regale a funny Elon Musk story that I've got, where we were sort of doing a deal and he came on the phone, and a lot of people were sort of saying a lot of interesting stories. This was around the time he was buying Twitter, and one of the funny stories that he was quite happy to tell us himself was he spends sort of 4 weeks on things, 4 weeks off, 4 weeks on. So yeah, I don't know whether he'll get to Mars or not, but he spends 4 weeks on the factory floor, being there, doing absolutely everything at SpaceX, and then forgets about it for however long, and then comes back. I'm not sure if that's conducive to the environment the engineers are working in, but it's an insight into how they do business. So I'll stay neutral on whether they get there first or not. I didn't hear you, Jackson, but I'm going to guess that we were asking the question that was in the Q&A.
Explain a little more on the securitization of the space industry.
Yeah, no, it's a really interesting question. And look, I mean, this is a very novel new area, right? So the reality around securitization in space is that if you look at, for example, a company like Telesat, it previously has used the capital markets very effectively to finance itself, not necessarily through securitization, but particularly for geo products is kind of where we would see it. But also we were looking at this for MEO, and we're looking at this also in the LEO space. But where you have those very stable cash flows with a good, strong customer base, where you've got generation of cash that's coming on, and you've got reasonably long life assets left, for the companies that then want to extract the capital out of that environment, there is definitely the role for securitization, right? Because you're bringing out capex from your existing assets, because inevitably you're going to need to refresh. So good examples are companies that are going through that transition phase, where whether they've had GEOs or MEOs, looking at LEO, or just looking to refresh their MEO satellites, and that applies to a huge amount of companies around the world. The securitization product there allows you to extract the cash day one, obviously at a discount for the full cash flows, and that allows you to refresh without then effectively affecting all of your other financings. So that's how we sort of see it working. We're looking at quite a few opportunities at the minute, and we expect that's going to be a product that is moving forwards, used more widely throughout the industry. And if you look at, like I was saying, data centers and other industries, that's how things have traditionally progressed. They've started with bank debt, they've moved on to other things, and then the sort of the final hurdle or the final frontier is often capital market securitizations.
Okay, thanks, Randy. Well, look, I'm really conscious of time. I wanted to first of all thank our panelists, Randeep, Dewey, and Ron.